Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. We hope that you had an awesome trading week. We do have one day left. Happy Friday, guys. In store today, we have an awesome panel with us on the show, starting with Money Mander. Mander, how you doing?
Morning. Happy Friday indeed. Let's end the week strong here.
Absolutely. Diamond Trades, good morning to you.
What's going on, guys? Excited to close out the week strong. Let's get after it.
All right, Ramsey Rippers.
Crazy earnings week. Wrapping it up. Let's do it.
And Mo Mamba. Mo, good morning to you.
Good morning. Good morning, everyone. Good morning, guys. Let's get it.
All right. We're going to go ahead and kick the show off with Fed forecast, economic outlook, earnings talk with Money Mander and Diamond. What do you guys got for us?
Yes. So let's go ahead and start with PCE, which just came in. So core PCE is important because it's actually what the Fed watches, right? I know that headline CPI number gets a lot of clout and everybody really watches it, but the core PCE is really what the Fed is focusing on. Core PCE year over year just came in about 4.4%, which was on the lower end of that forecasted range, 4.4 to 4.6. So more or less in line, even probably a little bit more optimistic than most were thinking. PCE, so not core PCE, but regular PCE came in at 5%, which was also in line with expectations of 4.1. We also had some personal spending and income data. Personal spending decreased by about 0.2% month over month, and personal income rose by about 0.2% month over month. So that's the importance of there. That's the economic data that came out today. We still have pending home sales and Michigan consumer sentiment at 10 o'clock. So not done with the news yet for the day. But next week is really going to be that massive week, right? We've got JOLTS and the FOMC interest rate decision next Wednesday. So you definitely pay attention for that. That's going to be a huge catalyst for the market, okay? Let's talk about some of the news that came out yesterday. We had jobless claims and GDP growth both come in yesterday. I will start with jobless claims. So if you guys look at jobless claims, initial jobless claims came in at 186,000, which was lower than that 200,000 estimate. The 4-week average of jobless claims is about 197.5 thousand versus 220,000 in 2019. So that suggests the labor market is a little bit tighter than it was before the pandemic, right? Even before the pandemic, we've got a stronger labor market than then, right? So, however, there are some signs beneath the surface that the labor market is really starting to cool off, right? And so we're going to highlight some of those here. First being temporary jobs, okay? So companies are reducing the amount of temporary workers in their companies, right? The broader decline in temporary workers a lot of times will coincide as an indication of a broader labor market slowdown that, sort of uses the hint that hiring is cooling. Additionally, the continuing claims, we can go ahead and go into that. So in December, 826,000 unemployed workers had been out of a job for about 3.5 to 6 months, right? That's up from about 526,000 earlier in April of 2022, suggesting that these people who are getting laid off are actually taking a little bit longer to find jobs, right? It's not like they're just getting laid off immediately into a new role. They're taking a little bit longer to find jobs, staying on those unemployment benefits a little bit longer. Another anecdote, manufacturers' overtime hours have slipped in December to the lowest level since the pandemic and the aftermath of the 07-09 recession. And then the last thing that we've got is that if you guys look at the Indeed job postings, right, Indeed, popular job website where people will go to find their jobs, these job postings continue to trend down, right? We've seen a really aggressive downtrend in job postings, particularly in the HR, human resources department of these companies. You only hire less HR workers if you expect to hire less of everybody else going forward. So there are some signs beneath the surface that the labor market is actually starting to cool off. Maynard, what do you think about that, particularly given how strong the labor market has seemed on these unemployment numbers that we get week after week, just going down and down and down?
Yeah, these numbers really surprised me because I agree. If you actually look into the data, like everything you just showed, the labor market has showed signs of cooling off. It definitely is not as strong as it once was. It just really surprises me, this one especially, because this was the lowest jobless claims print we saw in the past 9 months. So let alone coming in under forecast, let alone being lower than the previous print. This was the lowest we saw since last April of 2022. So I don't know, because it seems like every day I see a Fortune 500 company. Just in the last 48 hours, I saw 4 Fortune 100 companies laying off thousands of people. And I know the tech layoffs are a little bit different, but now they're getting into SAP, IBM. I saw announced layoffs. So either the labor market to me is extremely strong in that they're instantly finding new jobs, or there's still this wealth bubble to me that the Fed's looking to destroy, where they're not re-entering the workforce immediately because they feel like they don't have to. So I wanted to get your 2 cents on between the two, which you think it is, because clearly like there just isn't jobless claims right now, even though people are getting laid off.
Yeah, I think it's probably a little bit of both, right? You have obviously people who retired early, took that early retirement on the stock market, moves, and the real estate sort of boom. And I think that a lot of people use that opportunity to sort of cash out their chips and take themselves out of the workforce. I think that's a lot of it. But like I said, even below the surface, we are starting to see some things change. So I guess we'll have to pay attention to that going forward, and see which one's really more structural in terms of driving that unemployment into 2023.
All right, then real quick, I wanted to cover the GDP numbers here. So if we can pull up these two charts. At the surface, I'll give you the numbers really quickly. The economy grew a solid 2.9% annual rate last quarter, down from 3.2% in the third quarter, but still significantly above estimates. So the GDP actually did beat consensus and estimates for Q4 last year. Pretty surprising. I'll go down here. Final sales to private domestic purchasers is a measure they use to gauge consumer and business spending. Actually dropped 0.2% in the fourth quarter from 1.1% in the third quarter. And the real estate market, obviously one of the biggest ones sensitive to interest rate, fell 18%. Existing home sales fell 18% in 2022 from the previous year. So that was the big data I took out of this. So despite some signs of resilience, the GDP actually did come in over estimates. Data under the surface on this one, again, did suggest retail sales fell last month at the sharpest pace from 2022. Businesses and consumers are starting to falter. So that's what I wanted to pose back to you, Diamond, is that similarly to what you saw with the jobless claims, these numbers looked great at the surface, but if you look deeper down into the data, it shows not quite the strong economy that people are taking the numbers for. So what do you have to say for that one?
I think people are looking at the labor market and saying, okay, the job market is tight, and so what's going to happen is all simultaneously we're going to get an economic slowdown, right? We're going to get a Fed pivot, and we're going to get inflation to come down, and we're going to get unemployment that remains low. And it's like you can't have your cake and eat it too. All of these things are not going to happen. Something's going to have to give, and I think in my opinion, it's going to have to be labor. And I think the slowdown that we're seeing in GDP looks like it's going to continue, right? Because when you have a situation where people are literally spending less, which is exactly what the Fed wants, how are businesses supposed to make up for that? One way, obviously, is firing more people, which we've seen more and more. But in other ways, you're going to have to eat, some decrease in revenues. And so I think that's what we're expecting to see into 2023. I think that's my sort of outlook, my base case going forward.
Yeah, I saw all the same things. I see people taking these numbers as the GDP and economy growth just coming back to normal pace, but avoiding recession. And I'm of the same mindset. You can't have your cake and eat it too. Something's got to give here to get price stability back. And so we'll see how this pans out in the next couple of quarters, whether real GDP flips negative or we just continue at a slow historical growth and kind of avoid that recession. That'll wrap us up here. We'll give it back to you, Alejandro.
All right. Thank you, fellas. It's time for the system here. Let's talk about what we saw this week. So I'll do a quick recap. All right. If we remember, last Friday's when we got the first break over the 50 SMA, buy signal, topped out at 90 points. Perfect. That's trade number one. Second trade you could have taken, break below the 50 SMA, good for about 20 points. Not the best trade. I was in this short, got stopped out at entry. Next trade to take was the break back over the 50 SMA. Ripper. This was a trade I was in yesterday, good for about 60 points. As you guys can see, we came back. We tested that 10 SMA support. The trend in the market is still super, super strong. And I remember at the time of this trade, when I entered it, everybody came in on, Wednesday morning, rather, super bared up. And the market was selling off. SPY was nearing that 390. And the bears are hooting and hollering, shouting, oh, the trend line. I told you guys, oh, my God, the trend line we're rejecting. You guys are so dumb for going long. And then ripper right up. Look at it. how did we know to get long? There's literally only one way that I could have known to get long. It was on the break over the 50 SMA, guys. This is why I love using this thing. And again, good for 60 points. I netted 35 on the trade. So I'm having a good week. And now going into today, important to recognize where the momentum is. We're still above that 50 SMA on the 30-minute chart and on the hourly chart. So understanding that bulls are in control. And to me, it just feels like, let's take a look at the hourly chart. It really, if we zoom out here, you've had people trying to short this thing all year. And if you look at the amount of time that we've spent above the 50 SMA on the hourly chart when you would need to, or when you would want to be quote unquote bullish on short-term trend, we've spent a lot more time above that 50 SMA. Okay. People have just been trying to short this thing, and we just continue to climb higher. And using the system, using a momentum style trading strategy is really beneficial when the market is giving us this steady trend higher. And we're also able to play those little sell-offs, right? We got the sell signal last week that resulted in a really nice trade, but just important to kind of clear your judgment of any, just formulating your own opinions, finding a system that allows you to really just focus on the price action and trade the chart. Because again, we just keep climbing higher and higher. Now, but the last thing that I will say before we go into our next segment with Ramsey, we are in the midst of earnings season. And if you've traded using the system through an earnings season, you know that we know in general, right, that earnings brings a ton of volatility. Okay. So for me, my trading is going to look a little bit different in the sense that I'm going to be more protective of my capital overnight. So the money to be made is going to be during the cash session. So we've been getting really nice moves intraday. Surprisingly, we haven't seen that. December was the worst month for that. January has been really nice for traders intraday. We've been getting some trends, multi-directional moves intraday. But we have to remember that in the after hours and in the pre-market, when you have these larger players reporting, they move the market. So the system can be telling us one thing and momentum can be headed one way at 1 minute, and then somebody else comes out, reports, and flips things. And we see that kind of yo-yo back and forth for the entirety of earnings season, typically. But the main point there is that it's just unpredictable what's going to happen day to day. It's a little bit more difficult to actually swing positions. So that's just something that I wanted to say. I'm keeping that in the back of my mind as we start to really get into the thick of things with some of the big players starting to report next week. All right, guys. So that's going to do it for the system. I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning, Ramsey. Let's get it done.
Good morning, guys. Loaded series of questions today. I'm pretty excited to get after it. So before we get into our green or red question, just to recap the week, obviously Microsoft earnings come in hot. Crazy miss, downgrading on forward guidance, I believe on revenues and EPS. Market ends up rallying. Microsoft is what? Are they green since that earnings report? Yeah, pretty crazy. Flat in the pre-market today. The indices are flat in the pre-market as well. We had Tesla reporting earnings as well. I listened to the call. One of their spokesperson or whoever was in charge of that earnings call stated that they had the highest ever revenue, operating income, and net income in the company's history. I believe they hit on EPS and slightly hit on revenues as well. A lot of talk in the week coming into this week after Microsoft that, this absolutely, my collar is up, baby. You guys like this? Hell yeah. I'm looking at the comments. I'm watching you guys. Yeah, where were we? So Tesla, a lot of people talking that this was going to be the shit show of the year, the next start of the downtrend, trend line rejection, this, that, and the other. I don't know. It's looking pretty solid to end the week. I will say that if we close over 399, 400-ish area on SPY, I believe that'll be a close over the trend line, and we'll have to adjust those stats from Wednesday's question. Intel also big miss, guided down on revenues for next quarter. We'll touch on that later in the show. That's kind of taking the whole semiconductor market they're taking a little hit this morning in the pre-market after an incredible week, specifically NVIDIA clipping 200 yesterday. Anyways, quick summary. With that being said, green or red today? What do you guys think, Alejandro?
I'm going to go green today based on my whole spiel that I just gave there on the system. I'm honestly wondering right now if Money Manor is even listening to the show. If does he even know he's on?
Oh, I was listening, paying attention.
Earth Demander.
This is
Wake
what all
up.
you guys probably do during Fed forecast.
You know, that's just disrespectful.
I'm
That's
still
just
on the
disrespectful to Ramsey, who's given the whole Bet the Bell introduction, and you couldn't
Listen,
I
give
listened to the whole
the rest
thing.
of a shit.
Intel,
Listen.
shit earnings, Tesla. Everyone thought it was going to be the shit show of the year, but they beat. Let's get on with this.
No, I will say I don't blame Mander because I have to make a confession. A lot of the times, if you know what happens when you drink coffee, a little bit after you drink coffee, I tend to drink coffee at around 8:20, and I tend to do my business at around 8:35, 8:40 during Fed forecast. So I can't blame Mander for not for not paying attention. I'm just messing around. Mander, what do you think? Green or red today?
I'm going to take green as well. It just seems like all week dips are getting eaten up, so ride the trend while it's there.
Noah.
That's your loss. So you don't watch Fed forecast.
I watch
I
Fed
will. I will go with green as well. I mean, I really don't think it matters until Fed. I think it's like flipping a coin. Until
Right.
Fed, until we really get some trend in here.
Gotcha. I watch Fed forecast. I'm just messing around.
Remember though that we are keeping track now, so remember that your answers matter.
I'm writing them down. We got them right here. Mo, what do you think?
Green. Have to go green. Price action, yeah. Green.
It's a green slate for the entire team. Alrighty, next question. So we're going to talk about these semiconductors a little bit. Intel, big miss on earnings yesterday, guided down for revenues next quarter. I believe that their fourth quarter adjusted EPS, 10 cents, estimate was 19. First quarter adjusted revenue to 10.5 to 11.5 billion. Estimates were at basically 14 bill, 13.96. So literally like a 27, 28% decrease in that forward guidance. AMD reports next Tuesday. We'll see if this Intel earnings is kind of a hint of what's to come for AMD and the rest of the semis as well. Who knows? AMD could hit. Coming into 2023, that's what I'm going to focus on right here is Intel and AMD. So coming into 2023, AMD was down 58% year to date. Intel just about 50. Intel has the best dividend in the entire sector, around 5.6%, 5.7%. Both companies are positioned really well for the future, being the largest producers of CPUs for PCs and data centers. If you guys had to pick one stock that you like between Intel and AMD, which one are you going for? Money Mander.
So, like, which one to long, which one to outperform moving forward?
Yeah, I mean, which one are you going to add?
Yeah, AMD. This one's not even a question for me. So I didn't have enough time on Fed forecast to get into the numbers on Intel, but that earnings report was horrible. 32 revenues year over year down 32%, guided down another like 20 to 30% for the next quarter coming up. Didn't even give a fiscal year outlook because they said it was too uncertain, basically meaning like they didn't want to drop 20% overnight. So they gave no fiscal year outlook. Guided into a loss per share for next quarter on EPS. The stock's getting destroyed. AMD sees it taking all of their market cap. So I want to be in the one that's taking market cap, not losing it.
Yeah, Intel is down 9% in the pre-market off of that earnings. Makes sense, but who knows? They'll probably end up ripping through all-time highs after a huge miss from what we've been seeing lately with these earnings misses. Noah.
I gotta agree with Mandy here and take AMD. I'm just now looking at the Intel numbers from last night, and he's not sugarcoating it. They're really, really bad. So even just looking at guidance, right? 15 cents per share they're expecting for next quarter. Analysts were expecting 24, so they guided down there. And then they're looking for about 10 to 11.5 billion dollars in revenue. Analysts were expecting 14. So I mean, it's not looking good for them. And I completely agree with the whole market share thing. I think that AMD, even though they're a smaller company, as they continue to sort of grow market share in the space, especially if you're like a long-term player, if you're looking at this as like a long-term trade, I think AMD is the way to go.
Mambo.
I'm with the boys on this, though. I do want to ask you guys, what do y'all think long-term? So I'm thinking like 5 to 10 years. What do you think when it comes to that, AMD or Intel? Because Intel from what I understand, Intel manufactures its own CPUs while AMD subcontracts their own CPUs. That is to TSM, the Taiwan Semiconductor company. So, and on top of that, Intel plans to expand their own manufacturing too. So, to the point where the rumor is AMD might use Intel to manufacture their CPUs as well. So, what do you think about that?
See that. I could totally see that, particularly as you get those tensions in Southeast Asia, like as they start to pick up. I could definitely see that being a thing.
Yeah, so things could turn around there for Intel. Short term, I will say this. My answer to this would be short term AMD. Long term, I would say Intel.
I completely agree with you, Mo. I agree with that. Alejandro.
So I had to take a visit here to the AMD website just to kind of get a full picture for their product line. And this is a lot more exciting than anything that Intel is offering. And when you guys spoke about market share, that's exactly what they're doing here. We obviously know AMD is a lot smaller, a lot younger, but Mo, to your point there, as far as for the long term, AMD is a lot more innovative. Again, if you take a look at their website, they've got a super exciting product line: AMD Pro Security, AMD Infinity Hub, AMD Link, AMD Super Resolution. It goes on and on and on. AMD noise suppression, the areas that they are attempting to tap into. So I'm definitely AMD over Intel here.
Alrighty. Mo, you seems like you shut up Mo there. He's got no comment.
Oh no. I mean, I understand where he's coming from.
Mo brought up really good points.
He's like, yeah, but just looking at it from that perspective of it expanding its own manufacturing and then taking over, basically you're producing AMD's own product right out there. So you're gonna gain from that, right? Maybe in the beginning it'll affect their free cash flow. That is when you expand to manufacture your own CPUs. But in the long run, once they'll start producing quantity, then that money will show.
Gotcha. All right, cool. Great answers. We're going to move into the last question of the segment. Ryan, if you can pull up that tweet from Unusual Whales that I sent you yesterday. So we see one of these, this guy, Jamie Dimon, however you pronounce his name, of JPM said that crypto is a decentralized Ponzi scheme. And, it's funny that he said that because when I was doing my research back in May of 2022, he was actually stating how Bitcoin's slide at the beginning of last year is creating significant upside for crypto investors. He said, "I'm not a Bitcoin supporter. I don't care about Bitcoin. I have no interest in it," he said last year. But on the other hand, clients are interested and I don't tell clients what to do. That's a very interesting take on it because that's kind of how I feel about Bitcoin as well. I'm not a fan of Bitcoin. I was never really an investor in Bitcoin, but if an opportunity does arise for an investment to make some quick money, I'm all for it, and I won't just sit on the sidelines. So he did come out and say some,
I want to speak to his comment here because I'm now remembering that Jamie Dimon was the one when Bitcoin was trading under $10,000 who was calling it BS. And on the whole ride up, he was calling it BS. And this was like a big thing. Oh, Jamie Dimon, the greatest banker of all time, is not a crypto guy. Now, fast forward to when crypto was absolutely ripping up at $50K, $60,000. He admitted that he was wrong about crypto. So when did he say this, that crypto is a Ponzi scheme? Because this guy, he's just flipping back and forth, it sounds like.
Very recent. This was, a couple of days ago, I believe. But did he say he was wrong, or did he just say that he's not a fan? And
Hondo, I think he said he was wrong about the price. I think he said he was wrong about the performance.
Okay.
I think he never believed
he did miss out on like a 10x move.
Right. I think he never believed in it as like a thing.
Like 10x.
Right. I don't think he's ever believed in it, like actually believed in Bitcoin, but I think he also thought that it would go down, which was obviously not true.
Right.
Yeah,
okay.
I agree.
Okay. Well, now everything's, 2022 quarter 3 and 4 was a dream come true for Jamie Dimon. Look at what happened to Bitcoin. So he's saying a decentralized Ponzi scheme. Obviously, that brings up some thoughts on, the fiasco with FTX and Sam Bankman-Fried. You can't deny that there is lots of fraud that comes into account with respect to Bitcoin, and that whether it's, black market purchases and et cetera, just, completely decentralized.
Everything's a fraud, brother. Everything's a fraud. First of all, fuck Jamie Dimon, bro. Who the fuck is this guy to come out here? Let me tell you something. These assholes come out, say some shit just to bring the market down, then add more to their position. I'm telling you, man. You bet your ass these guys have some money in that sector for sure. No, I don't think. Yeah, go ahead.
I was just gonna point out that he also has funded several of like the infrastructure projects that are supposed to help crypto and blockchain sort of progress. He's definitely been on board funding some of those projects. So to pretend that like he doesn't have a financial interest at all in any of the blockchain ecosystem would just be incorrect.
Mander, what do you got to say about Bitcoin? Don't hold back.
I share his similar viewpoint, but to call it a decentralized Ponzi scheme, you can't call it that. Like, I think there's a lot of fraud and there's going to be fraud in any unregulated market. I understand why he wouldn't be a fundamental believer in Bitcoin, but like everyone else said, right, to say it's garbage at 5K and then it hits 60K or whatever it hit, like at some point you just got to admit you're wrong. Everything's a timing, right? A market is only what someone's willing to pay for something, whether you believe in it or not. If it makes money, it makes sense. And he clearly did not have the same viewpoint.
But that's the thing, though. Everything's a fraud. The stock market's a fraud. If these guys are going to make money, if they make money in the stock market, they have a chance to make money in this sector, they'll take advantage of it some way, somehow, whether it's tweeting, Bitcoin's going to zero and it brings it down 2K, it drops 2K, 3K instantly, you buy it back up. We've seen that happen multiple times in the past where so much stuff, so much news came out against Bitcoin, and yet we hit 69K. So,
I mean, I would say yes and no. They both have the element of investor psychology, but in one thing, like if you buy a share, you're actually buying a percentage of a company. You have rights that come along with that. Like, what do you fundamentally get?
Regulation. Yeah. No, I agree with that. Yeah. I mean, it's regulated for sure, but I still believe these guys have some money in this sector, man.
Oh, There's absolutely.
No way. Yeah.
JP Morgan's the king of that. They'll say the opposite of what they want to happen.
Mm-hmm. All right. That's it. Pass it back to Hondo. Thank you, guys.
All right. Thank you, Ramsey. That was a great bet the bell. Lots of good discussions there. All right. Now to wrap up the show, we're going to go back to Mo, who's going to give us market analysis. Mo, if you don't mind quickly running through your thought process. Saw you posted a video on Twitter last night that I checked out. You've been pretty spot on, my man. So excited to see what you have to say today.
Yes, sir. All right. So SPY daily time frame here for the S&P. Let's look at it. All right. So remember how we spoke about last BTB, guys? We had the log scale trend line and the linear. The linear is the blue. The log scale is the maroon right here. Now we finally broke and held. Now, is this a breakout or fake out? I think today is key. What we got to watch is if this is momentum to the upside, I do see a move right into this supply zone up here, right? And then we got to see how we react from there. If we do close above, I'm looking for further upside. So this supply zone comes from, it's about a 1 point supply zone. There you go, 408.70 to let's say 407.70. You could see the consolidation back over here in May and beginning of June. So nice consolidation up there. The gap right here, the rejection right there, right? And then when you finally broke and held, coming after you dropped, you came back up here, you broke and held the zone. Guess what you got? A nice break, hook, and go off that supply zone, flipping it into a demand zone, then ripping into what? That linear trend line. Now we did break and hold the log scale trend line, which is, price action here saying bullish. If you're playing this on a 5-minute time frame, on a 15-minute time frame, 30-minute time frame, you break and hold your trend line. What are you expecting further upside? Now momentum can fail. If we do, another scenario I'm looking at is if we do just chop around here, that's just weakness, and I'm expecting it to come back down, right? And one other one for the bears, I would say one last hope is coming back through today and holding, closing within the log scale trend line. Then I'm definitely expecting it to come down and hit this demand zone again, where we'll test it and see if we're able to break and hold just like we did over here, and then come down into our next zone. But we'll take it day by day, candle by candle, and see how this plays out. A great simple read. We just got to see today, is it a breakout or fake out? Let's see what happens. Thanks, Hondo.
You got it, Mo. Something that scares me about the breakout, and you You talked about having confirmation, seeing confirmation. Everybody who's watching the show, take a second to just look up a hanging man candlestick pattern. A hammer candle at the top of a move like that, if confirmed by a few red candles, is actually indicative of further downside. So we'll be watching for that. But that's going to do it for this morning show, guys. 9:05, 25 minutes until the opening bell. It's been a hell of a week. I hope that everybody had an awesome week trading. I know we did. For those of you that are unaware, we all trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com to start trading with us. Best of luck today, everybody. It's Friday. Remember, don't do anything stupid. Trade smart, kill it, and we'll see you back here on Monday morning at 8:30 a.m. Eastern time. Have a great rest of your day, everybody.